Wall Street is set to open sharply lower on Wednesday. U.S. inflation and retail sales data came in mostly in line with estimates, but uncertainty over tax reform and the decline in oil prices added to downward pressure. The IEA cut its outlook for oil demand growth. And in the previous session, U.S. indices closed lower on Tuesday. Yesterday marked a volatile trading session with indices pressure by shares in energy, telecom services, and media sectors. 51% of S&P 500 constituents traded lower yesterday. Moving on to this morning's company news, IBM is set to pull back. Warren Buffett's Berkshire Hathaway cut its stake in the company by 32%. At the same time, Berkshire's quarterly Securities and Exchange Commission filings showed that it increased its stake in Apple during the third quarter. And moving on to Target, the company reported a bigger than expected rise in quarterly same-store sales. The big box retailer also raised its earnings outlook for the full year, though its fourth quarter forecast missed estimates. The Minneapolis-based retailer is in the midst of a $7 billion turnaround plan. Looking at overseas markets today, Asian markets slid lower. The Nikkei off nearly 1.6%, the Hang Seng down over 1%, and South Korea's Kospi sliding 0.3%. European indices are also losing ground. Here in the U.S., the Nasdaq is in the spotlight. The downside does prevail for that index, and short positions below 6,300 are preferred with targets at 62.45 and 62.35 in extension. As for the Dow Industrials, the downside prevails, and for the S&P 500, the key resistance stands at 25.78.